everyone, good morning and welcome to Market Fatafat right here on ET Now. Well, it looks like the equity markets are in a fairly buoyant mood, but just as I said that, we slipped into the red. A quick glance at the index, it's no deep gashes, but 10,234. Definitely come off about 30-40 points from the high point of the trading day. The Sensex off by 77 points right now. And in fact, I just want to see what's going on with the broader end of the market. They're continuing to hold out irrespective of what's happened to the frontliners. The pressure is coming in from energy, commodities, FMCG, metals, as well as the Nifty Bank, which is just about turned choppy. Well, our team of research analysts are all here, as well as Kunal Botra and Hemin Kapadia. We're going to run you through a whole host of stocks that are in focus in trade today. Well, let's get started then with a big number, and that is BPCL. What exactly has the company delivered? What are brokerages saying, Vivek?
Well, it's not a very good set of numbers as far as BPCL is concerned. It's been a miss on most of the fronts. But, one thing that you need to definitely watch out for is the gross refining margin. And the gross refining margin that is actually linked to the Singapore refining margin has come in much below what the street was anticipating. So, it's been a negative surprise as far as BPCL is concerned. A lot of brokerages have maintained their sell stance. CLSA has cut its FY19 EPS target by almost 8%. And what they're saying is that the stock, which saw a recent pullback, given the fact that the crude prices fell down quite significantly, they believe that the pullback may be short-lived, and they believe that all rises would be used to short or to book some amount of profits that they've made so far.
All right, watch out for BPCL. No wonder the stock is down in trade. A big sell stamp coming in from the house of CLSA. Moving right on then, let's check in on some banks. And Kunal, what exactly are you spotting on Federal Bank today?
So there are multiple chart patterns getting formed across time frames. On the monthly charts, the stock is at a strong support, but the key is on the daily charts, and there is this bullish pennant formation. Now the stock was consolidating since last one and a half odd week. Today we've seen a breakout of this bullish pennant formation, and I believe the stock now should head towards at least a 92-94 kind of a target. So Federal Bank could be a good buy at current levels as well. Stop loss could be kept at around the 80 mark and targets 92 to 94.
All right, keep an eye out. Those are some important levels to watch out for. Let's move right on then and chat about earnings. And it's been a decent quarter for Just Dial, Karanya.
Yes, in fact, better than decent, Havan, as one can see from the kind of upsurge in the stock price. It's the third consecutive quarter of double-digit revenue growth on a year-on-year basis for the company. There's been an improving uptick in their paid listings, which has been fueling this growth. If you look at the headline numbers, revenue is up 5%, 221 crore rupees versus 211 on a QOQ basis. EBITDA has been flat on a sequential basis. It's come in at 57.5 crores. Margins have come in at 26% versus 27% sequentially once again. Profits are up 26% on a QOQ basis.
All right, so a pretty stellar quarter for the company, and the stock is gaining the most in the last 3 weeks on the back of those strong earnings. Well, let's move right on then, and it's clearly the sugar pack that is in focus today. In fact, you're seeing most of the sugar stocks that are in focus. We understand that ISMA, that's the sugar industry body, has lowered India's 2018-19 sugar production estimate by 11.2% at 315 lakh tons as compared to the earlier estimate of 355 lakh tons. The sugarcane in UP has been slightly higher in the area under this time around. In fact, we do understand that due to all of the reasons with respect to the rainfall, etc., we have seen the sugarcane yields which will significantly be lower than what was estimated 3 to 4 months ago. That's sugar stocks for you, but let's shift gears and talk about Balkrishna Industries. And Siddharth, take us through the observations today.
Although, Nifty and Bank Nifty now are at the lowest point of the day, we are seeing some correction you can see on your screen in Balkrishna, but still up by 2.5%. Main reason to highlight this stock, Avan, is that this stock is outperforming within tire space. 1075 was a strong resistance, and that has been breached, and it has been breached with very high volumes in both the segments, plus there is formation of long position in futures. So in a market which is not decisive, this stock is showing a decent bounce and breaking some important resistance level.
That's the take coming in 2.5% at 1092 on Balkrishna Industries. Let's move right on and understand what's going on in the aviation pocket. Interglobe Aviation is at 893. What are the charts suggesting? Is it going to be a choppy move, or are you seeing some sort of consolidation or up?
Yes, good morning. Very good morning to you, Avan. Yes, I think like you mentioned, it's going to be a choppy move. But nevertheless, we're looking at a recovery. The stock has posted a higher top, higher bottom on the daily chart, and the mechanical indicators on the daily as well as weekly chart have given crossover buys, indicating there is some more headroom left. A stop loss of 854, a target of 920, but once again, it's a recovery and not a rally.
Okay, a recovery, not a rally. Choppiness is perhaps on the cards for Interglobe. But let's keep it with more stocks then. In Supreme Industries is reacting to numbers, Vivek.
Well, that's right. It's cooled off a little bit from the day's highs or from the opening highs. But Supreme Industries a very, very heartening set of results. It's actually managed to outperform its much larger and much better known peer like Nilkamal. So if you're talking about the revenues up almost 25% on a year-on-year basis, you're talking about the EBITDA, very strong expansion. You know, the core EBITDA up almost 47.5%, aided by other income and aided by some lumpy one-off figures. But nevertheless, you know, it's been a strong margin expansion. The bottom line has jumped up almost 75%, and which is why looking at the slight green tick today. However, you know, overall, if you're looking at the numbers, the previous spreads are something that the company will look to maintain going forward as well.
All right, keep an eye out, but tempered off that Supreme Industries for you. Healthy margin picture, revenues as well have grown. Moving right on then, let's talk about an impressive set of numbers, and that's been delivered by Union Bank, Karunya.
Hi, Dama. The profit growth has been flat. It's primarily led by 7% NII growth and lower other income. But it's not a bad numbers when it comes to the bottom line versus a 1,500 crore loss in the same quarter last year. They've delivered a profit of close to 140 crores. NIIs have come in, like I said, higher by 7.5%, 2,493. Gross NPAs on a sequential basis have also come down from 16% to 15.74%. Net NPA has also seen compression from 8.7% to 8.42%.
All right, keep an eye out. Those are a pretty impressive set of earnings that the company has delivered. Well, let's move on then to the brokerage radar, and it is Sun Pharma that's in focus today. And this time around, it's come on the radar of Morgan Stanley. They're pretty bearish on the stock. They maintain an underweight. Target price is 448. They believe that Zictia arrival will hurt the US prospects, and the stock down about 1% in trade, struggling at 567. At number 10 then, it's Ujjivan. Let's understand where the stock is headed, Siddharth.
Well, it had a very rough ride along with Equitas a few days back, and there were, you know, significant formation of short positions. But yesterday and today, we have seen some sense of resemblance coming back in this stock. We are seeing formation of positions. So yesterday, I was hesitant to label it as formation of long because stock was up after a significant crash. But today we are seeing continuation of that. It seems that there is some bulk deal which has taken place. Some fund has also bought in Ujjivan, and we are seeing formation of long position with decent price action. So this is one NBFC, or rather I would say one financial stocks rather than saying NBFC, which is finding takers at lower levels. That's what statistics are resembling.
All right, that's the take coming in on Ujjivan, which is currently holding out quite smartly in the green. Let's move on then and chat a little bit about Sterlite Tech, and it clearly seems to be continuing its up move. Kunal.
So yeah, I think Sterlite Tech, 5 days consecutive, the stock has shown a big price surge. In fact, in the last 3 days, you've seen that the stock has rallied almost 10 to 14%. But now, on the weekly charts, the stock has confirmed a breakout, and that too after almost 9 months to approximately 1 year of remaining sideways. So I believe that this could be a good breakout for Sterlite Tech, and the stock should rally to almost 420-425 levels in the very near term.
Watch out, those are important levels to keep an eye out on Sterlite Tech. But let's move on then and dissect the numbers of LIC Housing. What kind of a quarter was it, Vivek?
Well, only if you're looking at these particular quarter numbers, the numbers were in line with what analysts was expecting. But the one thing that have actually concerned a lot of analysts on the street is the company's exposure to the LAP book and this is something that is actually worrying analysts a little bit. They believe that there could be further pressure in this particular segment going forward. The other thing, of course, is the property book that the company has. They believe that this is something, given the fact that fundraising is becoming a bit of an issue, as well as if you're talking about the net interest margins, they believe it could contract going forward. On the back of that, a lot of analysts have turned quite cautious as far as the entire housing finance space and especially LIC Housing Finance is concerned.
All right, that's the view coming in on LIC Housing. The stock currently quoting at the lowest point of the trading day. But let's keep it then with results that are expected today. And on the radar, of course, is Tech Mahindra Karnya.
Right, Tech Mahindra, like most IT companies, at least the expectations are quite optimistic, quite high. We're seeing dollar revenues come in at 1,234 million. It's in a growth of about nearly 1% actually. On a sequential basis, revenues could be up 4% on a sequential basis once again. We're expecting a margin expansion as well, 17.5% versus 16.4%, and profits also likely to grow 13%. Now, what essentially are one of the key expectations is that the telecom vertical is likely to do very well and will also drive the CC growth of 1.7% on a QOQ basis. Non-telecom, however, is likely to remain weak. One needs to watch out for what the outlook will be on telecom business, what's the 5G opportunity, and what's the deal pipeline looking like.
Lots of factors on the cards, but what's the stock doing prior to its number as well? As we speak, holding out in the green. Well, Jet Airways, another day, another news bit on the company. In fact, remember, it's seeking to raise fresh funds and boost their operational efficiencies, and reports indicate that they've appointed Goldman Sachs and BCG as advisors to achieve these goals. And remember, we've recently seen quite a massive rally in the jet fuel prices. The currency is weakness as well as eroded the financials. So given the fact that most of the payments are dollar denominated, so we'll have to see what exactly they do on that front. But other than that, the management says that they have not defaulted on the lease rentals, which remember had sent the stock in a tizzy just yesterday. 7% higher, Jet Airways seeing a relief rally. And at number 15, it is an IT name, a large cap one at that, and that is Infosys. So that, let's understand what levels to map out here.
Well, if you look at this market, there are a lot of stocks which are going higher, but you need to identify stocks, and especially large cap ones, because there is a scope of fresh buying coming from mutual funds, and which is taking place. Stocks where formation of long positions are taking place, and Infosys is one such name which is seeing formation of long position. In fact, it respected its 200 DMA, which was around 625, 630 odd levels, and from there you have seen a bounce back in Infosys along with formation of long. So showing some signs of strength.
Some signs of strength, that's the take coming in on Infi. But as we take a break, thanks for staying on with us. This is Market Fatafat, and we're counting down to all the stocks to keep on your radar. It's a minor blip in the index, so as of now, it's 10,234 on the Nifty. But there are stocks that are buzzing, PFC being a case in point. In fact, Heyman, would like to know your technical take. Is this sort of a breakout sustainable?
Looks like we have had a prolonged period of consolidation. The stock has posted a 7-month high. The indicators have given crossover buy. I think one can hold it with a stop loss of 88 for a further upside.
All right, that's the take coming in. The weekly breakout after consolidation, stop loss 88. Well, let's shift gears then, and no show of Fatafat is complete without mention of Reliance Industries. So Vivek, walk us through the Goldman Sachs view.
Well, it's slightly contrary to how the market is reacting, but what Goldman Sachs has actually done overnight is that they've come out with a report on Reliance Industries. Reliance Industries, remember, post the results has been really weak. So what they're saying is that at this point of time, the correction is something that's quite overdone. They've actually highlighted a few of the concerns that the street has, especially relating to the IMO regulations that may come in by 2020. The street was fearing that there could be a diluted version of IMO that could come in, which had led to a complete re-rating as far as the oil and gas segment of Reliance was concerned. But Goldman believes that Reliance is still very well poised to get all the benefits as far as IMO is concerned. And once the regulation comes into place, Goldman believes that Reliance is all set for a further re-rating. So they believe, they have a significant target price of almost 1,440 rupees a share, and they have a strong buy stance as far as Reliance is concerned.
All right, that's the take coming in. A little bit of a contrary view, but the view is that they still maintain a buy on the stock. Reliance Industries, after yesterday's move, taking a backseat at 1,063. Meantime, it's been a robust set of numbers for Granules, has it, Karanya?
Has been. In fact, if you see the headline numbers, it's been a beat on all parameters. Sales have come in at 580 crore rupees. Profits have come in higher, 60.3 crore versus 40.3 crore. So clearly a 20 crore sort of up move on a year-on-year basis. EBITDA has also done pretty well, 100.5 crores. Margins have, however, come under pressure, 17.3% versus 19.6%. In fact, on a QoQ basis, the gross margins remain flat at 45.3%. But looks like, given how the stock price is going in today's trading session, it's probably because the market is punishing for a degrowth or a compression on the margins front.
Okay, that's clearly what's weighing down on investors' minds. For now, the stock is in the red. Well, let's move on to a capital goods name that is hogging the limelight today, and that is BHEL. The stock in focus, and it's currently quoting at the highest point of the trading day. The reason largely being the buyback news. In fact, the board has approved the share buyback proposal. They're going to offer 86 rupees a share for the buyback and are going to buy back close to 5.16% capital for a sum of close to 1630. Stock quoting comfortably in the green. To cement then, and what's going on with the derivatives data as we look at ACC today, Siddharth?
Well, yesterday it was Ambuja Cement which added a lot of open interest. Today, not as high built up what we saw in Ambuja. Nevertheless, ACC also is showing similar sort of built up, 14 to 15% rise in OI so far. And we are seeing heightened volume activity as well. But unlike Ambuja, where the build-up was near its very strong support of 190, ACC has this big gap on daily charts, and support is still far away, 1250, 1260. So if someone has to read this build-up, then the build-up which happened in Ambuja is much more prominent. Watch out for these levels, support levels. It is quite possible that ACC might drift towards those levels.
Okay, keep an eye out. That's ACC for you, up 0.6%. Moving right on then, let's chat about Arvind, which is having a fairly strong session. Where are you placing your targets and stop losses, Kunal?
So I think, it's a swing breakout on the daily charts for Arvind Mills. 335, 334 has been acting as a mild resistance for the stock. But today and yesterday we saw good volumes. Today we're seeing a continuation of price, rallying above this, swing breakout levels. And this could be a start of a short-term uptrend. So the 50 DMA, which is at 360 levels for Arvind, I think that is where the stock should head over the next couple of days. Would recommend a buy at current levels, and stoppers could be kept closer to 320 mark.
2% higher, that's Arvind for you. But on that note, we're completely out of time, so we'll wrap it up right here on the show. Thanks so much for watching. The next edition of Market Fatafat coming up at 1:30.